Hi, I'm Nicola McKenzie, founder and mortgage advisor here at DM Mortgages, and in today's video I'll be going through some of the important things that you need to consider before you start on the journey to buying a property. So to find out more, stay tuned. Now, before we get into the detail of today's video, if you enjoy the content, then please make sure that you subscribe to the channel and hit the notification bell so that you never miss any future video uploads. Now, to get the best viewing experience from this channel, DM Mortgages do not monetize it. So to show your support in return, when the time comes for you to consider your mortgage or remortgage options, then we would love you to head over to dm.mortgage and book in there for a free mortgage consultation with a member of our fully qualified mortgage team, and we can help you to find the best mortgage deal. Now, this video is also part of a series of videos dedicated to helping you to prepare to buy a property. So make sure that you check out the other videos in the series. Now, what I'm going to be doing throughout this video is covering off a few of the main points and things that you need to consider before you start on the journey to purchasing a property. Now, the first thing that you will need to consider is the type of property that you are hoping to be able to purchase. Now, this is largely obviously going to impact on the price of the property, and that's why it's an important thing that you need to have a think about first and foremost. Now, I appreciate that until you get to the point of seeking mortgage advice from us, you are going to be limited in terms of working out how much a bank might lend to you. But before you speak to one of our mortgage team to get mortgage advice, having a rough idea of the type of property that you're willing to consider and the style of property will at least allow you to work out if your wants and your needs are even realistic in the first place, and whether or not you might need to make some compromises. So the kinds of things that you need to be thinking about are things like, are you considering purchasing a house or a flat? Now, if you have 3 children, then a 1-bedroom flat probably isn't going to fit your requirements. So again, having a rough idea on the type of property that you'll consider or not is very useful at this stage, because again, that's going to dictate on how much the property is likely going to cost you. And also, when it comes to mortgage lender criteria, different mortgage lenders have different levels of deposit depending on whether or not you are purchasing a flat or a house. And in many cases, lenders may need a higher deposit when you're purchasing a flat, which is why knowing whether you're looking at a flat or a house is important at this stage, not just to look at the types of price ranges you're considering, but also when we're placing your mortgage with a particular lender, we need to know this information, because that is going to be one of the driving factors as to which lender you might be best placed with. Now, the other important reason that you need to have a think about this is because a flat or a house is going to have an impact on your monthly costs as well. So if you're buying a property in England and Wales, then most flats are leasehold. And what comes with leasehold properties are things like service charges and ground rents. So therefore, that's going to also be something that you need to factor in into your monthly budget in terms of the ongoing costs once you've actually acquired the property. So it's important that you work these things out early on so that you know exactly where you stand. Now, it's also useful to again know whether or not you're considering a flat or a house at this stage, because not only do you need to work it into your monthly ongoing budget costs, but also as well, a lender will want to factor that in for affordability. So when you go for a mortgage assessment with us, when we're working out affordability calculations and eligibility, that is a factor that lenders are going to take into account. So if we can get as accurate as a guide at this early stage as to what typical service charges you might be considering. Of course, until you find the actual property, we're not going to know the exact figure, but we can at least do some ballpark calculations for you to again give that mortgage application the best chances of success. Now, it's worth mentioning that property listings will usually display this information and the costs associated if you're unsure. And also, it's not just flats that are leasehold, so watch out for that, because some houses, it is the minority, but some houses can also be leasehold. Now, if you actually decide that you want a house, then now is a good time to be thinking about the pros and the cons that come with the different style of house choices. So the difference between your detached, semi-detached, mid-terraced and end-terrace properties. Now, I'm not going to break down those pros and cons in today's video, but giving you a general idea, detached properties often come with more space and are often considered the most desirable style of property. But what comes with that often is the highest price tag as well, followed by semi-detached, followed by end-terrace properties, and then mid-terrace properties tend to be the cheapest style of property. But of course, you need to weigh these things up. You also want to be thinking about how important garden space is to you and the number of bedrooms that you require as a minimum, because once again, these things are going to help you even before you start your house search, to work out your needs from your wants and to find out and work out if you may need to compromise some things, because ultimately the style of the property and obviously the things that come with the property are going to help you when it comes to working out what your budget is. As a viewer of this channel, I assume that you're considering purchasing a property in the near future. So it's important for you to know that DM Mortgages are an award-winning team of fully qualified mortgage brokers that provide advice to clients all over the UK. Now, we spend countless hours making free content for YouTube and other social media platforms to help to give you guys sound and useful information to make sure that you're in the best position to make informed decisions. To support this channel, when the time comes for you to consider your mortgage options, we want you to book a free online mortgage appointment with a member of our fully qualified mortgage advice team. Because without your help and support, keeping this channel going simply isn't possible. Now, we searched thousands of mortgage products from high street and specialist lenders to find the right deal for your circumstances. And we also provide a free will writing service to every DM client. So head over to dm.mortgage and book in for a free mortgage appointment when the time comes. And also make sure that you subscribe to this channel if you find the content useful. But for now, let's get back to the video. Now, the next point that you need to have a think about before you start on your property journey is the location of where you wish to purchase the property. This is incredibly important because before you start looking at properties, this is going to have a major impact on whether or not you need to compromise on your expectations. For example, if you live in central London, but your budget's only going to stretch to a maximum property price of £150,000, then that means that you're going to need to compromise or realign your expectations. And at this stage, I would strongly recommend getting to know the location that you're purchasing within. Now, what I strongly don't recommend at this stage is going on any viewings. You don't need to do that until you've had mortgage advice, you know exactly what you can afford to buy. That comes later down the line. But what it is a good idea to have at this stage is an idea of what the minimum price is for a property in the location that you want to purchase. So once you've worked out the style of the property, how many bedrooms you want, that kind of thing, jump onto Rightmove, Zoopla and other similar property websites and look at the location you're willing to live in. What do property prices of that description start from? That will at least give you a really good starting point. Now, once you know the minimum starting price for a property in your area, then that's going to help you to know what minimum deposit you're going to need to save, but also as well, it's going to assist you when you do book an appointment with us, because our job is to work out the affordability, but of course it lets you know and us know if what you're trying to do is even realistic in the first place, and whether or not we're going to need to explore housing schemes such as shared ownership, the first home schemes, or other schemes that might be available for you to make this viable. Now, what I would say is that at this stage, don't make any assumptions. Just having and working out this information is all you need to do. Our job is to then, as mortgage professionals and experts, is to work out if you can get to that point, and if not, what you need to do to get yourself to that point. So don't make any assumptions, work out the information, then from that we can work out what the minimum deposit is you'll need and if a bank is going to lend you what you need to make this viable. Now, the next point you need to think about is how much deposit you're going to need. Now, of course, how much deposit you're going to need is going to be based on your individual circumstances. But what we do know is that as an absolute bare minimum, you're going to need to contribute 5% of the purchase price of the property. Hence why I said working out what property prices are in your area is the best place to start for what you want. And then take that price and work out 5% of it. So for example, if you're looking for a 2-bedroomed house and a price for a 2-bedroom house starts from 250,000 in your area, 5% of that would be £12,500. Now, if you've already got £12,500 saved, then I would say that it's a good time to check in with us and have an appointment, because you may be able to get onto the ladder at that point. Now, of course, if you've got poor credit history or there's other complications in your situation, then it might be that you need to save more and come back, but it could be viable with as little as a 5% deposit. If you're not yet at the 5% deposit mark, then you need to put a plan in place to save that as an absolute bare minimum. So if you're looking at saving £1,000 a month, you know you need £12,500, then it's going to take you 12 to 13 months to get to the point of at least saving up your deposit. So put a plan in place, and that would be the best place to start. Now, of course, there are some exceptions to needing 5% if you're having a gifted deposit, or there are other schemes out there, but in most cases, the majority of buyers are going to need to put 5%. Now, I'm going to summarise some other points, important points that you also need to consider. You need to have a think about how long you plan to live in this property and what other circumstantial changes might be happening and occurring, certainly within the next 5 years. Because if your circumstances are due to change in the next 5 years, then you need to weigh up what impact this is going to have on your eligibility for a mortgage. And also, is it going to impact on your ability to sustain your mortgage payments? It might also impact on the type of property that you're going to buy. So let me give you an example. If you were planning on going from a permanent job to a fixed term contract, then that is going to affect your eligibility for a mortgage, because most lenders will expect a fixed term contractor to have at least 1 year's worth of history in that type of employment before offering you a mortgage. Once again, I am generalising here and there are exceptions to most rules, but typically that's the general rule around that. So again, you need to have a think about what's going to change in the next 5 years and how that may or may not impact on your plans. Again, another example, if you're going from employment to self-employment, then that's going to postpone your plans, because a lender isn't going to consider a self-employed applicant until they have a bare minimum of 1 year's accounts, but in most cases 2 years worth of account history. So again, you need to work out if it's worth you putting those plans on hold or not. Now, having also a clear idea on how long you plan to live in the property is also useful. Now, again, I appreciate you are going to be limited in knowing for sure how long you're going to live in the property until the time actually comes when you know what property you're going to buy. But having a rough idea, is this a forever home or is this a stepping stone for you to get to your forever home, is useful to know, because these kinds of things are also going to impact from a mortgage perspective how long you might tie into a product. Because when you come to sit down with us and go through a mortgage assessment, you're going to have different options available. You can tie into a mortgage for 2, 3, 5, 10 years. But of course, if you're looking to up sticks and move after 5 years, then a 10-year fixed rate is probably not going to be suitable for you. So these are things that you need to have a think about. Of course, they're changeable, they're flexible, but having a rough idea is going to be helpful. And of course, if you're considering buying your forever home, then again, we need to look at your mortgage options and your affordability so that we can maximise that and put you in the best position to really enhance your budget. So this is really good to have these things worked out to put you in the best position. Now, don't forget, yes, we are the qualified mortgage advisors and the experts, but ultimately it's your home. You need to be happy living where you're living. We can't advise you and tell you if the house with the bigger, better garden is better suited for your needs. Some things are your responsibility to decide. We then work with you to find the best way financially for you to achieve that goal, okay? Now, the next Other thing to consider are property schemes that are available. Now, of course, our job when you're booking for a mortgage appointment will be to advise you on what schemes you're eligible for, but it helps if you have some familiarity with the different types of schemes that are available before you go into a mortgage appointment. And I do have videos on this channel that do give you a brief overview of the majority of housing schemes, but you need to have a think about at this stage which schemes you may or may not be comfortable using. Now, bear in mind that when you use a scheme, they're usually designed for those that cannot afford, for whatever reason, to purchase the property outright. That may be because of a small deposit, having a lower income, but having familiarity with the schemes that are available to you will again give you an idea of what property types might be viable for you. So for example, the first home scheme is only applicable to new build properties. So if you hate new build properties, then that's probably not the scheme for you. So again, until you've had mortgage advice from us as the professionals, try not to discard any schemes, because one thing I do find is that people don't always have a full understanding of how schemes work and can sometimes misinterpret them and discard schemes that actually could be very beneficial to them. So I'm not expecting you at this stage to necessarily decide and discard which schemes you wish to use, but having familiarity with them and a basic understanding of them is useful for you at this stage. But like I say, keep an open mind until you have had advice from mortgage professionals. Now, in summary, make sure that you keep an open mind before you get mortgage advice from us. Don't make any assumptions, but do at this stage have a clear idea on your wants, needs and preferences, and at least what is realistic. Now, leave comments below in the comment section on how you found this video, and when you have saved up at least a bare minimum of a 5% deposit for the style and type of property that you're considering, before you start any viewings on any properties, then like I said at the beginning of this video, to show your support for this channel, make sure that you head to dm.mortgage, which is our website, when the time comes to book in for a free mortgage appointment with a fully qualified member of our mortgage team. And of course, make sure that you subscribe to this channel and hit the notification bell so that you don't miss any future uploads from us. And I will look forward to catching you in the next part of this series. Make sure you check out the whole series.